What's up, stock traders? My name is Mike Huddy with Clover Trading, and today I want to talk to you guys about sector momentum and themes within the market. Oftentimes, it's our job to put our detective hat on and go out and find what macro catalysts are moving our penny stocks. We always start with the macro, the big picture. What is in the news? What is really pushing stocks? What is creating social media hype? And then from there, we're looking to target specific stocks in small cap or on the OTC market that are reacting to this type of macro type of news. Oftentimes, this sector move, this thematic move can be one of the strongest catalysts that you see in the market. I can't tell you how many times I've seen this, whether it's the marijuana sector, the Bitcoin sector, I've seen a shipping sector, I've seen a COVID vaccine sector, I've seen so many sectors, I lost count. And right now, we have 3 sectors going crazy in the market, and I want to show you guys exactly what these sectors are. Let's take a look. The first one I want to talk to you guys about is called the war on naked shorts. Now this one is awesome, and the reason it's awesome is because I've never heard something so absurd. It doesn't matter whether I believe or not in the catalyst pushing the stock. What really matters is the reaction. And the fact is, there's this war on naked shorts. Let me explain a little bit about what that is. On my screen, you have this guy here named Roger James Hamilton. He came out of nowhere and started talking about how naked shorts were attacking his stock, and it's the reason it's been depressed for months and months and months and years. And he's taking it to the man, the war on naked shorts. We're gonna occupy SEC 2023. This is real stuff that you can see on Twitter. I don't necessarily believe in his cause, but he has taken GNS, which is the stock that he's the CEO of. You can see just here in his bio. He's taken GNS from a low of like 50 cents just 8, 9, 10 days ago to a high of $8. I mean, it's actually pretty incredible. Again, it's not about whether I believe in the catalyst, it's about the reaction. And if he's going to create volume, if he's going to create movement, that's going to create patterns for me. My job is to understand the why. Why is this stock spiking? And I can quite clearly see the reason why is this guy Roger James Hamilton with 900,000 followers has some sort of crowdsourcing effect. So he goes to Twitter and he announces the naked short war, and we're all going to down with the shorts. And this is actually super interesting. What had happened was quite a few CEOs stood up and raised their hands and said, yeah, naked shorts are destroying my stock as well. Like, we're joining the fight. Guys, the reality, I've seen this type of blah on Twitter before. The reality is these guys are pumpers. They're pumping their stocks to exorbitant prices so that they can eventually dilute and create financings from that appreciated price in their stock. And it's at the expense of the retail who don't know exactly what they're trying to do. 99% of these end in disaster. I don't know when, and I don't know how high they're going to go before that. The higher it goes, the better for Roger James Hamilton at the end of the day. So we'll see. GNS is definitely still in play. Again, my job is to identify what's moving it, and then also to identify on Twitter the number of CEOs that have taken charge. One of the stocks that I really keyed into was GTII. We're going to come down to GTII. This is an OTC stock. So this is the most fraudulent of fraudulent companies, most likely. And it's an OTC stock, and it's been running from $1 to $2.68 in a matter of 5 trading days. And I noticed this one, I play it, and it doesn't really matter. I play it long, I play it short, I wait for my patterns to show themselves. And again, I want to know how ridiculous of a catalyst or how good of a catalyst it really is. In my opinion, I think this catalyst is absolutely the craziest thing that's been worked up in a shed that I've ever seen. And it's awesome because they're targeting tickers that haven't run before, they have clean charts, and they're making movements. Like I said, it's not about the catalyst. Knowing why they're moving is the most important, and then finding patterns that you affiliate yourself with. The fact is, these guys on Twitter are bringing in volume, they're bringing in range, they're bringing in momentum, and that is what creates the chart patterns. The reason I started buying GTII was because look at this pump job. Look, GTII, Occupy SEC 2023. These are hashtags you can look up on Twitter to see for yourself. I'm not going to show a number of examples, but part of the reason that I actually started getting long GTII was because I saw that this other guy on Twitter, that's not Roger James Hamilton, but they're tweeting at each other, had a big following and started started tweeting a lot about GTII. In fact, they all went to Washington, D.C. and had an Occupy SEC 2023 to raise awareness for the naked short war. I was following this whole weekend. The whole weekend I was laughing. Honestly, I'm just like, who are these people? And I cannot believe there's actually like 30, 40 people that are there. And as I'm watching all these people on Twitter, I see this truck literally saying GTII started the movement exposing naked shorts. Guys, there is a 99% chance that this is absolute BS. It honestly doesn't even make sense to me. But it doesn't matter, right? I will play this long, I will play it short, and I'm going to identify the ones that are hot, that have actual social media presence. Not just every CEO that raises their hand and says they're joining the naked short war. Which ones can move their stock? And it's those stocks that I'm looking for patterns, not the random ones without liquidity. So the naked short war has been going on. It's been awesome to see. There are a number of tickers that are responding well, but these were the two prominent ones that I've been trading and following very closely as they have big social media movements. The next theme that I've done really well on in the past month is the cars. This is what I call it. And let's just get into the chart. This is Tesla's chart. You can see ever since this low here at 101, it's been on an absolute tear. It went from $100 all the way to 200. And Tesla is notorious or famous, depending on how you look at it, if you're short or long, for being a sector mover. It's called the EV sector, electric vehicle sector. And we saw it back in the day where we saw Tesla start to spike and companies like Rivian, like LCID, Lucid. I mean, there's a ton of them. It's this EV sector and it usually has a theme. And this time I didn't really consider it an EV sector, but I started to realize that stuff about cars were moving in relation to how Tesla and the overall markets were moving. But for some reason, car companies, and you'll see what I mean in a sec, were moving in the most unique ways. So Tesla is actually not that unique. This is just a really nice uptrend. But let's keep going down. The next one is FFIE. This is more of like a penny stock. This is more of like a small cap type of scenario. This is a big multi-day, multi-month breakout. This is something that was alerted in our chat room. The 65-cent area was a big area, key level. This started happening after Tesla started running, and FFIE, or I refer to it as FIFI, they are in the electric vehicle space. Bottom line, just a really good chart, buying the multi-day breakout, buying the multi-month breakout, and just being patient for one day, and it was some extraordinary percent gain. And again, just kind of going off the backbone of Tesla and finding another electric vehicle maker that had a good chart. Scrolling down, LCID, something that I've traded in the past, but generally is not very volatile. And then you see what you have in front of you are 30-minute candles. And you can see the stock went from $8 to $17 in roughly 2 hours. That's an extraordinary move, and it just so happens Lucid is a car company. Let's go to the last one, Carvana. Rent-a-cars? It still counts. It's a car company to me, and this is actually a breakout that I bought really well. I was buying it in the 7s when the market was really heating up and things started flying, and I had a lot of conviction here. I was buying in the 7s, and I only made it one day. I mean, it wasn't like a hero story. I made it into the 9s and made good money, but the fact is the car theme continued, and Carvana went to 20. So roughly a 200% gain in just 5 days. So this car theme is really hot, and that's what I've been focusing on. The reason that I was able to trade FFIE is because I identified Tesla first. And then after FFIE, I never actually traded Lucid personally, but CVNA was in that theme, and I felt confident taking a chart pattern within a theme that had been working really well for me. I call this type of perspective or strategy putting good money after good money. I don't want to nail a hot sector and then go find a marijuana stock to buy if marijuana is not hot. I want to put good money after good money. Shout out Phil Godecker for instilling that in my mind at a very early stage in my career. Phil Godecker is a great trader. If you don't know, he's on Twitter. Phil Godecker, there's a lot talked about him. He's a good day trader. In any case, last thing that I want to talk about before this video gets too long, the bankruptcy bounce. This was also a theme that we saw. Not too viral in terms of how many tickers caught on. It's very hard for stocks to have bankruptcy bounces. It takes, first of all, a stock that's going into the processes of filing for bankruptcy, and then there has to be a short squeeze. Those two recipes don't normally happen, but it has happened in the past. This bankruptcy theme has gotten hot in the past. I remember it very specifically back in 2021, if you guys want to look at the charts. Hertz Rent-A-Car and JCPenney were really, really big runners during 2020 and 2021. I don't remember the exact dates, but they were both in the process of going bankrupt. Here we have Bed Bath & Beyond in the process of going bankrupt. Whether they go bankrupt or not, that's not my job to figure out. My job is to play the price action. And you can see Bed Bath & Beyond, it starts the process, it starts having this negative reaction, and then a bunch of volume comes in, and we have this absolutely amazing rip from the low ones all the way to 5 to 6. Again, My job is to find the patterns that I can identify and position myself in an advantageous way. BBBY was one of the bankrupt tickers. After Bed Bath & Beyond, we had Party City. Now obviously Bed Bath & Beyond was the runner. It was the main one that had all the attention, all of the volume, all of the news, and the catalyst around what potentially could happen before they declared bankruptcy. Party City was not such a great scenario. Bankruptcy was a lot more in the moment, more destined to become a self-fulfilling prophecy for Party City. But still, because BBBY started spiking, Party City also had a nice move from a low of 15 cents all the way to 60 cents on massive liquidity. So these are things I look for. Now, this isn't a great example of something I would trade. I don't like the liquidity here, but just after both of those started spiking, we have Coors Q, another bankrupt stock in the market that is just kind of spiking on air right now. They're all part of this theme. And traders, especially day traders, like to flock to themes, especially ones that they've had previous experience with and success with. That whole idea, putting good money after good money. So that's it for the video lesson.